saying now the company must do, aside from reiterate its guidance, has it got to map out something credible strategically to tell investors there is something new in the offing?
Cousin, they are in the midst of a transformation plan at the moment, so no doubt they'll be implementing that. But I guess the key question for Billabong shareholders at the moment is where is fair value of the stock without those takeover bids on the table? If we have a look at Billabong, a lot of this has already been priced into the stock, and that was after its second private equity bidder, which was believed to be Bain Capital, bailed out on the 20th of September. And since the 20th of September, we've seen a decline of 25% in Billabong shares, and that's because we saw two private equity bids on the table, one pulled out, and no doubt private equity, the way they look at valuation, the financial hurdles when they come to an acquisition are quite similar. So the fact that we saw one private equity company bailing out means that there had been a lot of market speculation that we could also see TPG bailing out. So the stock down 25% since the 20th of September, and of course the second private equity company was involved from the 6th of September up to the 20th of September, where we saw the shares rising by 14%. TPG has been involved with this company for a while. On the 20th of February, of course, the bid was at $3.30, but then we saw a massive capital raising, a number of downgrades for the company. And on the 24th of July, they came back with a non-binding indicative offer of $1.45. They've now gone through the due diligence program, and that means shareholders need to re-evaluate Billabong on the basis of having no takeover potential. It's been a very difficult year for Billabong. We've seen the chairman exit and then a new chairman coming on board, the CEO exiting, a new CEO on board. We've seen profit downgrades, Billabong saying that they won't be paying a dividend in the second half of 2012 financial year or the first half of FY13. Are coming out to reiterate our profit guidance, and that's for EBITDA of between $100 to $110 million. So no doubt concentrating on that transformation plan that they're in the middle of and concentrating on commerce, rationalising some of their stores, but this is going to be quite a big hit for Billabong, especially given that we've seen the shares declining 25% or 1/4 in value since the 20th of September when we saw that second private equity bidder bailing out of the process.
Well, for a while, we've seen West Texas crude tick higher overnight. Tensions, of course, between Turkey and Syria keeping traders quite on edge. We've had an inventories report out of the US. Are you buying at these levels?
Oil's looking pretty good at the moment. We saw a rise of 0.9%, and as you mentioned, Moira, it is geopolitical tensions which is helping to support the share price. Those tensions between Turkey and Syria helping the oil price and lower expectations of production from the North Sea areas. So that was despite, I guess, an inventory report out of the US which actually showed an increase in inventories, and usually that would put downward pressure in oil prices. But the geopolitical tensions that we are seeing at the moment, as well as expectations for lower production, really helping to support the oil price, and that's translated to better returns from the energy sector this week. We've seen the energy sector rising by 1% in the week to date. Stocks like Woodside Petroleum up by 2.7%. Oil Search has gained 2% this week. We've seen Caltex, which not necessarily is an oil company but more of a refining and marketing business, reaching a 52-week high. And not only have oil shares done well, but we've seen natural gas prices reaching a 2012 high. Natural gas prices up by another 4% overnight, so that area looking quite good as well. So the energy sector expected to be underpinned by those stronger oil prices that we are seeing, and that's being driven by expectations of lower production as well as the geopolitical tensions that we are seeing out of Syria.
In terms of what you're expecting in trade here locally, all of these themes that we've looked at, what are you expecting to see right now? The market actually opening in positive territory, of course, and just drifting into the red.
We're expecting to see a pretty quiet end to the week, and it has been quiet all week. Next week, we are expecting to see things speed up a little bit, and that's because we start to see the miners back in focus. We see quarterly production reports coming out from the big miners. We see Rio on Tuesday, BHP Billiton on Wednesday, and Woodside Petroleum on Thursday, and a number of conferences around next week as well. We'll see the WA Forum on Tuesday and Wednesday, so we will see some of the bigger players like Atlas, Fortescue, Wesfarmers, Woodside Petroleum, Petroleum presenting at that particular one. We'll also see the Canaccord Global Resource Conference on Wednesday to Friday. So this is where some of the smaller players will be presenting, like Tiger Resources, like Saracen. And the ASX also has a small cap, medium cap investor conference over in Singapore, where we will hear from the likes of Primer Biomed, as well as Troy Resources, Rock Oil. So it does look like it's going to be a busy one on the corporate calendar. Lots of comments to watch out for, and not forgetting AGM season. It's going to be AGM Tuesday next week, where we do hear from Cochlear as well as Telstra. So no doubt it's going to be an interesting day on Tuesday, and it looks like next week's going to be a bigger one in terms of corporates on the ASX.